Uranium friends, happy Thanksgiving. Um, let's take a look. You look as I look. I have, I've been following, but I have not really prepared myself for this. So you are going to see what I see as I see it. But at least right now for these ETFs, and it's the weekly chart. So weekly uptrends are intact. So the only thing that's important to me for these ETFs are three levels, right? 29.28, 44.10 for URNM, and what is this here? I don't have this marked up. 2104 for URNJ. Why? So weekly uptrend. That's all that matters. I'm going to zoom in just a little bit more so you see. All right, listen. Draw down, draw down, draw down. Here's your low. It's set, right? Weekly bounce gets the high, 12 EMA, of course. Draws back down, makes a higher low. Once it breaks this higher high, it is a weekly uptrend. So it's low, high, higher low, up to your higher high, higher low, which is set, right? How do we know it's set? Because it took this weekly high out. So now it's just looking, sorry, for a weekly high or low. The odds favor there to be a weekly high or low. And if I was to guess, and if you follow me at all, you know I'm a big moving average guy. If I was to guess, the weekly high or low will show up somewhere around this $30 range. Yeah, 29.50 to 30.50, somewhere around in there. Okay, so nothing else really matters equity wise until this changes or this high changes, right? So URA is obviously stronger. Okay, it's been stronger. What does that tell me? It just tells me one thing: there's more institutional money coming into URA than the other instruments. They don't have the liquidity. They don't have the option chains. Institutional money needs liquidity first before anything else. So if there's a nuclear renaissance and if the institutional money likes the nuclear renaissance and wants to be part of it, they're going to go for the spots where they have liquidity and option chains. So that's why URA is, in my opinion, stronger. It's a much better ETF. Now, I know there are some newsletter writers out there and purists or whatever that say, oh, URA has non miners in it. So what? Okay. Those are the anchors, the old strip malls or the regular malls. They used to have anchor stores, your Macy's and your Lord and Taylor's and all that crap. All right. So some of these non uranium names, even though they might have some nuclear exposure, that's their anchors in here and they pay some dividends, blah, blah, blah. So we are in a weekly uptrend in all the ETFs, which means, in my opinion, the sector is in a weekly uptrend. It's a very good bounce. All that matters is these weekly low pivots. As long as they hold, the sector is fine, in my opinion. Okay, so the physical uranium, the actual futures. So this is a 3-month chart, right? So here's your quarterly chart, and this is your Fibonacci tool from that bottom to this very top. So when you look at that, and anyone who knows anything about technicals in any equity, in any market, in any sector, they look at this and they say, this is a very strong chart, right? And someone asked me the other day, and I posted it. Yes, it's a strong bull flag. This is a very good bull flag right here. Just get this alert reset so it actually dings if it comes here. Every single fundamental pundit that you guys have been listening to that think they control the space has been wrong for months and months and months and basically almost a year, calling floors and whatever. They've been wrong. It's just that simple. But the good thing is that this is a very good upward trajectory with very good, very healthy consolidation. And in my opinion, even if it comes down to this 70 area, the 68 area, the 65 area, I mean, literally, this thing is just back testing the breakout it had from the January 2011 highs, right? That's all this thing is attempting to do is to retest the breakout as the rising 12 EMA on this quarterly chart meets it and comes to this, in my opinion, becoming a very important level which is $72. So I'm not going to be surprised if it comes there. I'm not going to be surprised if there's an undercut. It will be problematic for me if it gets starts getting a little bit lower. So that's hold on. This is log. This isn't log scale, right? So sometimes, and I use log scale especially when I'm using longer time frames. But sometimes it pays to look at linear. Okay, and it's a little bit different of a look, right? So even with linear, you're coming down to the 38% retracement, which is like yellow flag territory if it breaches for a bull flag. So this is still in linear, still a very healthy 3-month bull flag in log, a very healthy 3-month bull flag. So notice these levels that are coinciding, right? So at $72, we have the 12 EMA. What is it, 68, 69? So $72 is 69 to 72. Let's just use that area, okay, which is a previous breakout, previous top from 12, 13, 15 years ago, whatever. Rising 12 EMA on the quarterly, and the 23% retracement on log scale. Go to linear scale, same levels line up, and now it's a 38% retracement on linear. So there's a lot of technical things that are pointing to this level, to this $72 level. All right. And for all intents and purposes, we have to say, oh, it's not going to just be 72. 68 to 72 is a problem if it breaks down. It's just what it comes down to. So, people are talking about these interviews with all these guys. Nobody knows what the hell they're talking about. It's that simple. Uranium Insider, no idea. Triangle, no idea. Nostra, no idea. They have no idea. They keep calling floors and they're wrong. Okay? It's not because they're dumb. It's not because they're trying to be manipulative. It's because they just don't know. And the fundamentals are clouding them thinking, oh, this is going to be, listen, I'm here because I know that there's a nuclear renaissance going on. I know we're going to need uranium. The spot price is telling you something completely different, right? So it is in a daily, weekly, and monthly downtrend. The 3-month is a beautiful bull flag. Okay? Just look at it that way. Anybody who wants to buy physical uranium through this spot fund, wait for the turn. Wait for the turn. If you want to keep bottom fishing, okay. Now we also see at this level that we have some structure here, right? That structure coincides with our bull flag metrics, our 382 retracement and our 23% retracement when we're in log. So a lot going on. Even if we zoom all the way back out, let's see if we can see any more structure. Yeah, it's just that breakout there. There's a little bit of structure here. So that's the spot, in my opinion, to be watching, and we'll see how it reacts there. I'm making no predictions as to what happens going forward. I just know that as someone who's nimble enough as a retail trader, I know I can wait for the turn. I'm not going to try to pick any bottoms anywhere in anything in this sector because it's just, in my opinion, a waste of time. So let's see what CCJ is doing on the weekly, right? So CCJ is just doing beautiful things, right? So much like these ETFs, weekly uptrend, and that does not get lost until 49.73 breaks down. I guess if you want to be even more precise, it's going to be whatever that is. Oh, I didn't even get it right. Hold on. I suck at this. 50.16. That is the key metric, right? So I'm expecting the bounce to come at 52, 53 bucks. That's what I'm expecting from this technical chart. That's all. But look at all these confluence down here. You have a lot of the moving averages down here at this level to maintain that weekly uptrend. And it's just that simple. You can look at all these other equities in the space. They're going to be following kind of the same path, at least the big ones, right? So when I say big ones, I mean the big boards. Yeah, see, the chart looks similar, right? So it's the same thing. Now, with next gen, once again, making new all-time highs with no follow through at the moment. But this is what it's cool. It's moving, it's grinding up through this all-time high, and it's staying relatively cool. And this is really good look. This is where you get the power to move on, to move forward from here. Just as long as these key weekly level pivots don't break. The space is depending on these weekly pivots, in my opinion. Just see what UEC looks like. Same look, The space is all dependent upon these weekly pivots, and they're just doing their weekly 12 EMA ride now, right? So if you've seen any of my videos, I talk about it over and over and over and over, right? So they catch this ride, these weekly 12 EMA rides, and they run them. They run them good. So it just caught them again. They get stretched. Moving averages like to get bunched up together again, and they start doing it again. So, could you see another leg run like this? Yeah, maybe, as long as it stays a weekly 12 EMA rider and the 50 DMA ride, they kind of coincide. That's that pink line. It's going to be fine. That's my opinion. And I will tell you the same thing, which I say over and over. These monthly charts look fantastic. So the short-term action, which might be freaking everybody out because they bought the tops in, November 2021, they bought these highs because they were just listening to all these charlatan cheerleaders saying everything about whatever, you're a little stuck. I get it. But these weekly charts look fantastic, at least on the big board names. I don't know if I'm going to be able to say that about Encore. You just see something with Encore. Yeah, even Encore's monthly chart looks fine, right? So it's not as good as the other ones, right? So, you look at UEC and CCJ and they've already taken out their all-time highs or testing them, Um, you know, Encore is doing something a little bit different, but it's still in its um, yeah, it's sideways. We're in sideways chop here, right? So, but if you take this from the top, it's a weekly downtrend back to well, yeah, back to a weekly up. Well, it's a double bottom. It's a weekly uptrend, but this is just sideways. This is a tough one to even to make any gauges on right now. It's just sideways, but we all know, just like everything else in the space at this point, the weekly pivots are the most important thing for us to hold right now. These low pivots. So 345. 375 was a big number for me for a while with Encore, and it breached it and lost it, regained it, and still dancing in this area. So, sideways trading, to me, it's low risk buys down here, probably low risk sells up in here. That's just the way shorts and longs are going to be looking at this thing, but a little bit different than the rest of the big board names in the sector. I'm trying to think about, let's see what the 4Us are doing, because they've been showing some relative strength in this run. They made the move a little bit better, but still, you know, it's a weekly uptrend, but it's catching this resistance, and it's being held down, which has been a big level for a while, right? So this, let's just say it's about $7 is like the metric where it just has to get through. And then if you get through 7, you probably have a good shot of getting up to like, 780, 8, and then back to the bottom of this box, which is the 850 area. So that's the way I'm looking at it. Again, though, it's all about the weekly pivots and just making sure they hold it, right? Everything in the space is kind of looking that way. What's a big popular OTC name? Let's look at what Bannerman's doing, right? So it's a straight down. It's starting to, this, quite frankly, is still in a weekly downtrend, right? So you have your high, you have your lower high, dinky pivot, lower low, right? So now you have your bounce. So you start here. You start on this one, low, high. Now it's just looking for its higher low compared to this level, right? So compared to this level, Bannerman is looking for a weekly higher low. Now it seems to be getting some love here, and that level coincides with all this resistance, coincides with support over here, coincides with resistance over here. So when you start to chart things, you start to look at that stuff and say, okay, well, how's it interacted with these levels before? It has plenty going all the way back. Let's just see on a monthly. Coming all the way back into November of 2012. There's interaction. So it becomes a bit of an important level. It has for the lifetime of this stock. This is the point of control. Point of control is probably right around here. For the life of the stock, it's probably around this number. So there's a lot going on this level. Maybe, just maybe, and I think I'm pulling. Maybe there's a little bit of an inverse head and shoulders thing happening here. Maybe. I don't know. I think I'm stretching it when I try to say that, but I mean, there's something there. There's a little bit of a pattern saying, hey, it's holding a certain number, which it did over here. And you could look at it that way. Uh, yeah, you could look at it that way. I'm not getting crazy with the pattern here, by the way. So it's a different look than the larger exchange names, and it makes sense. So most of the OTC stuff is going to do that. The way I view these low liquidity OTC things is that I got to take positions in them if I have to. I know I'm just gonna have to sit and hold. So my position size reflects the risk there because it's hard to buy, it's hard to sell. Even it's harder to sell than it is to buy. I think I called it the Hotel California. You can check in, but you can't check out. That's it. You look as I look. The space is not as bad as it seems that people are talking about. And my only guess is that they're top tickers. They are November 2021 top tickers. Now, if you are that person, doesn't mean you're a bad person, doesn't mean you're dumb, doesn't mean you're a loser. It means that maybe you should retrospectively look back and find out why you bought the tops. What made you buy the top instead of being patient or maybe just scaling a little bit in, you know? Was it all the cheerleaders in the space at the time? Was it the fact that you had FOMO? Was it the fact that you just didn't care? You know that there's a story here and you want to be involved and whatever happens, happens. You look at that introspectively, but the fact of the matter is there's still a nuclear renaissance going on that was being talked about over here, and it was still going on over here. Where would you rather be an entrant? Remember, I always, always, always post this all the time. Entry points matter. We didn't get down here. I didn't get down here. I got in. I got in somewhere around here. Okay. So entry points matter. So this is really a painful, painful entry point up here. You're still not in control of the trade. Down here in this area, you're in control of the trade. Be in control of the trade. Over and out.